There are a number of tools that I use heavily in my own trading that simply don't come with the platform. Things that I feel in order to have a fighting chance that I really need to be looking at. And so from the beginning of this channel, I have always written and used my own custom indicators in my trading. And people in the live stream are always asking when I'm going to make it available and so forth. And I've always resisted that effort. In fact, NinjaTrader approached me first and said, "Hey, Seth, why don't you make these indicators available and sell them?" And I told them no. But since then, I have realized that making them available is really a necessary step in order to create the kind of collaborative community that we're trying to create. You guys need to be able to look at the same things that I am looking at, and we want to continue developing these indicators, new ideas, backtest things, and share how we're using them. So to that end, I am now making my indicator package available. You can download it from speculatorseth.com. The download comes with a free 2-week trial, and after that, it requires a monthly $10 subscription, which is done through YouTube. So to subscribe, click the join button down below and subscribe to the Elite $10 tier. That will give you access to some of my best indicators, including the market depth tape, the synthetic dollar index, and even the inventory cost basis. That will also give you access to a private Discord room where we're going to continue to develop the indicator suite, backtest strategies, and discuss how we're using the tools. Now, I've chosen this kind of subscription model because there's a lot of people out there just taking advantage of people and selling indicator suites for thousands of dollars that you don't even know if it's going to help you or not. Whereas with the monthly subscription fee, you can subscribe. If it doesn't work out or you stop trading, you can cancel the subscription at any time, and then you're just out the subscription fee. And then the onus is on me to create something that is worthy of you subscribing to month after month. And then that can kind of create the really tight collaborative community that we're looking to create. And we can even use that consistent revenue stream that we've then created to create more services and put even more time into developing this for you. Today, I'm going to talk about what is included in the packages. I'm going to do a deep dive into every indicator, what all of the options are, and how I use them. Note that what I'm telling you right now is current as of today. If I change things, then I will make follow-up videos in the future, and I will always have the most up-to-date and detailed documentation on speculatorseth.com. All right, the first one that I want to talk about is the market depth tape, and this tool is an add-on, which means to open it up, you're going to want to go to your NinjaTrader control panel, go to new, and market depth tape should be an option down towards the bottom. Now you can see I already have one open here in the upper left, so I'm just going to bring it into the middle and expand it a little bit. So a traditional tape is going to show you market orders hitting into the market and moving price, whereas the market depth tape is focused more on the limit orders. So it's going to show you significant changes in big orders placed on the bid or ask. Now, I have this open for the 10-year treasury, and for instance, you can see that there's been some changes. For instance, somebody stacked 200 lots at 137.28, and we can look over here at the DOM and we can see, okay, there's 6,000 orders there. So probably before there was 4,000 and now there's 6,000. So I wrote this because I often found that I would miss significant changes, or I just wouldn't realize when they were happening. So I would look at the DOM and there's like this huge order there, and I'm like, oh, when did that happen? I missed that. It's also really useful when a lot is going on if you want to go back and trace through what the sequence of events was. Now, there are a couple of options for this, and to get into that, you right click on the object and you go to properties. So the first thing is that there are colors. So the brighter colors, the orange and the cyan, are for stacking. That means that they added an order on the bid or the ask. And the darker colors, the orange, red, and the medium slate blue, are for pulling. So you can see here is a stack. They pulled something off of the ask, and then they put it on the bid. for instance. And you can change all of these colors. There's also some filters. So the most important filter that you're going to have there is the minimum size. I would recommend placing this to an amount that's fairly large so that you're not getting a ton of updates all the time. You can set it to a very low value. So here I can just set it to 0 and it will show you every update, right? Now you're going to get a ton of updates here. But I like to only show me the really big changes. So I'm going to set this to 1,000. There's also a minimum position and maximum position option. So this basically defines how far away from the best bid and ask that change actually was. So I'm only looking within the first 4 levels right now. If you set that to 0, you will often see changes. If you're using Rhythmic and you have the full market depth, you will see changes really, really far away. Prices that have absolutely no chance of trading that day. That can be useful if you want to watch certain algorithms, but I personally am only interested on the prices that are immediate. I also have some options to only show bids or only show offers, and there's an audio file location. So the way that the audio file location works is you have to specify the name of a file within your NinjaTrader 8 documents folder. So here I'll pull this over. I've got my NinjaTrader documents, NinjaTrader 8, and I have a chirp.wave under there. And I can just set that in there. Okay. Now you want to be careful with this because if you set your minimum size too low and you're getting a lot of updates all the time, then you're going to hear that sound all the time. You hear it. So something's happening. So a bit of volume coming in and hitting 29. You can see. This could also be combined with the show bids and show offers. So you can also grab the chirp.wave off of speculatorseth.com. My little sound I made myself kind of sounds like marbles clicking, but I find this kind of like a Geiger counter sort of sound really useful when the market gets going to kind of see what the pace of the market is. Next, I want to go into some of the simpler indicators. So I have the synthetic dollar index up here on the screen. So the dollar is something very important to watch. It affects the value of basically everything that we're trading in futures, especially for you guys in the more hard assets like oil or gold. Now, the best way to look at the value of the dollar is the dollar index. Unfortunately, the dollar index trades on the ICE exchange, and getting data for ICE is quite expensive, and most retail traders just don't trade on ICE. So most retail traders have been just watching different currency pairs. For instance, I am charting the euro up above. But what we've done with the synthetic dollar index is we've just taken the data that you're getting from the spot FX futures and calculating the dollar index manually. So there aren't any super complicated properties or anything with this one. Just know you do have to have the data. So if you get the CME bundle, then you should have the data to use the synthetic dollar index. Also note that it is loading a ton of data series underneath of it. So just keep that in mind when you are setting up your chart. If you come in and you try and set up a chart with like 6 data series and then you try and add the synthetic dollar index on top of it, that can kind of cause some problems. And you might not want to load a super long time frame. When you come in here to the data series, you'll note that I'm only showing a few, 15 days. You come back here and you put it to like 100 days, and then it's loading like 8 data series underneath of it. That's a lot of data that, takes a while for your chart to load up. So just keep that in mind. Okay, next is spreads. So you're looking at the 2 and 10-year spread here. This is a widely watched indicator of the economy. When the 2 and 10-year spread inverts, that has preceded recessions many times in the past. But watching spreads is really important if you're trading treasuries. If you don't have a good idea of which way the spreads are going, you're going to misinterpret the order flow a lot. Now, there is a front leg and a back leg to a spread. So if we come here to the CME website, they have this page where they list what some of the common ratios are. So we're doing the 2-year versus the 10-year, and you can see that it is 2 to 1. So the front leg is going to be 2 and the back leg is going to be 1. So if I just come here into the properties, we can see here the front leg is ZT, that's the 2-year treasury with a ratio of 2. The back leg is ZN, which is the 10-year treasury with a back ratio of 1. Now note here that all I have to do is put in the instrument name ZT or ZN. I don't have to specify the month. So if you don't specify the month and you don't have this user provides month checked, then it will use the main data series month to determine which month it's looking at. So if you want to do an inter-month spread, like you wanted to spread, the March contract versus the fall contract or whatever it is, then you would want to click the user provides month and you would want to put the months in manually. Or if you want to add this onto a chart where you are not charting the same month as what the main data series is, then you would want to select that. But the nice thing about having it unchecked is then when you move or when you roll over to the new month, the spread rolls over too. You don't have to come in and change anything. Note with spreads that because you've got two things changing, the way that a candle works is kind of a little bit, there's a couple of different ways of doing it. And so what I'm doing here is I'm just looking at what was the highest that the 2-year got during that period, and what was the highest that the 10-year got during that period, and then what was the spread based off of that. And, that's how I'm trading these candles. That might not be accurate. So there could be a situation where the spread gets up to a certain point in the spread candles, but that was never actually touched. It's just an aberration caused by the difference between how the different instruments are moving. And that's why I have two versions of this indicator. So here is a chart that I use on a more short-term time frame, and you can see here down at the bottom I have the spread. So you can see that the spread has been moving a little bit today. All right, so if you're doing short-term charts or you're doing something with robots, you would probably want to use the regular spread indicator, whereas if you're doing longer-term charts like a 30-minute chart, then your candle spread is going to be more useful. Next, let's get into some of the meat of the level 2 histograms that I have. I have 3 histograms. There's changes, large orders, and resting orders. Now, something that you need to keep in mind with these indicators is that it can't load historical data from when you didn't have NinjaTrader open. It has to record the market depth when you have it open. So you can see here, these 3 plots are plotting from when I opened it up this morning at around 6:30, but it will save that data once you have it cached. And I'm doing all of that manually. That's kind of one of the really unique things about these indicators. So here I go to yesterday, and you can see I have data from yesterday. Now you can manage this a little bit if you go into the indicator settings. When the indicator is created, a unique ID is set so that it can differentiate between multiple instances of the indicator on the same chart. That data is then cached into your My Documents NinjaTrader cached folder. So here we are, My Documents, NinjaTrader 8 cache. And you can see it will create files with the ID, the name of the chart, and the indicator, and the date. So you can then go in and say, okay, well, I don't need this data from a year ago, so I can go and delete that and free up space. It's also useful to know that ID in case you want to rebuild your workspace or something of that nature. You can just remember what that ID is and then make sure that it's set in your indicator so that it will still pull up the same historical data. Now, in terms of properties, these all have similar properties here. You got a min filter, max filter, min level, and max level. And some of them also have only showing bids and only showing asks. Now, these indicators also have a lot of plots, and not all of the plots are visible by default. So you might want to go in and see what are some different plots that are available that you might want to look at. So they're very flexible and they allow you to look at a bunch of different things. So now let's go into what the difference between these histograms are. The first one that I want to talk about is the changes. And I really look at changes kind of like volume, except for that it's much more granular. So it gives you a really good idea of just how interested people are in the current market. So a really great example, if we just come to, current action right now, you can see that level 2 changes not very much when we're in the pre-market, but then once the exchanges open, you can see there's a lot more activity. Now, if I go into the changes here and we just look at the different plots, I want to point out I have the blue being stacking and the red being pulling. There's also a total and difference series, but you notice that the amount of stacking and the amount of pulling that you get overall are pretty similar. And that exposes something that I don't think a lot of new traders realize. Most orders are not being canceled or added, they're just being moved. The robots will decide, oh, I don't actually want to trade this particular price, so they don't just cancel the order, they'll just move it to a different price. That's why there's also that difference histogram if you want to look at that. I don't have it set here because I'm mostly just interested in the amount of activity in the market. But, that difference might be useful if you were making a robot or whatever. So this is just the total number of changes that have occurred in that time period. So the higher that is, the more changes there were, the more interest there was in the market. And here again, you can set the different filters. So you might not be interested in action that's going on really far away from current price. That's a really good filter to use. You can also filter it on size. So you can say, I only want to see how many changes are being made by really big fish, or I only want to look at the one lots. And those can all tell you different things about the current market. Next, we have the large orders. This is the one on top. And what this essentially shows you is the size of the largest order within that time period. So here, as we've been going along today so far, you can see there have been bids as large, or stacks rather, as large as 100. And there have been pulls as large as 300 during what we can see here. And this is just a really great indication of, when a big guy does something. You will very often find we will come down into an area and all of a sudden the size of the lots that you're seeing here are a lot bigger, and that can cause a turn. It's just an indication that there is more institutional interest at that level. If you come here into the data series, okay, so there are filters here for only bids or only offers. And there is a stacking, pulling, and total options here for the large orders, all right? Lastly is the resting orders, and this one is a little complicated to explain how it works, but essentially what we're looking at is what are the total number of bids versus the total number of asks. Now, those of you familiar with order flow might immediately be thinking, well, that can be deceptive because people can spoof and things like that. And so what we're looking at here tries to account for that. That's why you can see that there is a bright white line and there is a dark gray line. So these are attempting to show you the difference between the orders that don't move and are just there all the time and definitely want to be filled versus the orders that are stacking and pulling, right? So if we come here into the properties of this one, right, has the same min and max filters that you can set in here. And then there's a number of plots. So there is max bids, max asks, min bids, min asks, and then these differences and max differences. So here I'm showing the difference between the two of them, but it can also be useful to show just what are the bids overall doing and what are the asks overall doing, and you can plot those things too. So resting orders can be really useful as a trend filter. So here, if I'm looking at yesterday, we can see this time period where we had some pretty significant downtrend, and you can see here in the level 2 that there was imbalance where there was a lot more offers out there than there were bids during this whole time, kind of pushing them down. And you can even see how when we get down here towards the bottom, you start to see a little bit of gray. So remember that the gray is the orders that are stacking on there, whereas the white are the ones that are there all the time and have a high probability of wanting to get filled. So once we got down here, we started to see a couple of large orders stacking and moving around. And in this particular case, it kind of made things move up. When you get into a more range bound market, the difference between the gray line and the white line, especially if they are on different sides of the zero line, starts to matter more. And so here you can see, for instance, in this choppy action back and forth, kind of where it turns. Now, these histograms on their own, any one individual thing, it kind of makes it difficult to base an entire trade on it because the level 2 changes very quickly and is not entirely reliable. But when you combine that with other things, especially stuff like news, this can really help you optimize your entries and kind of alert you to when something is going on. I saved the best for last. The inventory cost basis is probably the most sophisticated and complicated indicator. I'm really proud of it, and I've found it extremely useful in my own trading. Now, there are a couple of secrets to it, so I don't want to give away everything about how it works, but the general theory behind it is very important to understand in order to know how to interpret what you're seeing. And to explain the basic theory behind it, I want to go back to my DOM over here. So I have taken a position in the micros over here. So this DOM over here, and you can see I bought at 37.21 3/4. So you can see that that price is blue and there's a 0. That's basically where I break even at, right? And the market has moved a little bit against me. So if I buy here, you can see that that blue price moves down because my average price has changed. It is now at 37.21. All right, we call this, that number where the average price that I have gotten in at, the inventory cost basis. So if you are a market maker, you're going to be placing orders at like almost every price, or maybe every other price, or there's different ways of doing it. But essentially, you're going to be picking up inventory all over the place. And then when it rises up over here, you're going to reduce your inventory because you're not necessarily trying to predict what the swings are going to be or anything like that. You're kind of more making money off of the noise. Okay, so I've been letting the market move around a little bit and things have started to move our direction, and I've taken a little bit of profits. So you can see here now, my average position is 37.22, but you can see that my break-even line where I actually start losing money is way down here at 37.19 3/4 now, and that's because I took some profits, right? All right, now back to the inventory cost basis. The inventory cost basis is essentially trying to show what those levels are for the market as a whole. So the blue line is going to be the average position for those market makers that have been acquiring long inventory. And this dotted blue line is going to be that point at which those market makers are losing money at that point. And it's vice versa. Here is where the average seller position is. And here at 37.24 is the point at which those market makers are losing money. So this gives you a good idea of who is in control and what the market is doing at the time. So if you want to buy, then preferably you would want to have your average position to be lower than the seller's position, essentially, right? If I could get long below 37.20, that would be the optimal thing. Vice versa, if I wanted to get short, I would want to get short somewhere above 37.21 and a quarter, right? But that also means when we're above here, this means that the buyers are making money. The buyers are in control. The buyers are making money, and that they're going to have money to spare. And so you kind of have to factor that into your analysis. That's also why these break-even lines can be really, really useful. Because once you get beyond that point, that's where those short market makers are going to try and reduce their inventory because they don't want to lose money. So it's difficult for price to get above that level. You're not going to get a lot of stops beyond that price, right? The initial push through it, some short orders are going to stop out. In order for us to continue moving up, we're going to need new orders to come into the market. Essentially, you would need market buyers coming in and taking positions aggressively for price to continue onward. Now, this indicator can be really effective at giving you an idea of how far things can go and where you might want to take profits. So here today, I'm going to take my profits right there because our inventory cost basis, if we come back to the chart, we are well above the break-even line for the short sellers, and it's the Christmas holiday. There's not a lot of action. Probably the most likely scenario is for them to rotate around this price. So it may just turn into an absolute trend, but I caught a good trade there. I'm glad that one worked out so easily. I only had to do that once, so that's great. And this is how I tend to use the indicator. So just some notes on things that I have observed or found from back testing. There is definitely a tendency for the market to rotate between these two positions. So you can see here off of the open, it does this quite a bit, right? It goes between these two positions a ton of times. But eventually you will tend to get some sort of a trend when one side gains the advantage. So in this instance, the sellers did eventually gain the advantage. You can see here that the sellers, it's staying below the seller's average price. They're making money, they're in control, and they're eventually able to push it down to the spot where the buyers are losing money. And then you can see here, this is quite common. They'll be able to push through that line for a while, but eventually there's a tendency for them to pull back up before the end of the day. In fact, for them to close below these dotted lines is extremely rare. I'll show you a few more examples from some screenshots that I've taken in the past. I post these on the website in the documentation section. It's really common when we get a big down move for them to go to one of the lines and then bounce. So you can see here, they get to the line and then there's some sort of temporary bounce. You can see that again here in this one. Here, we had a pretty big down move. I mean, that's something like 50 points in 10 minutes, right? And what do? They go down to the buyer's break-even point, and then there's some sort of a bounce. Now, notice, at this point, you're getting new participants come into the market. So it continues to move down for a while, but eventually they do get a bounce. And this shows another thing that I find really common is that there will be a bounce back to the break-even point, and then they will go down for even more. Here, another example of that. Having a pretty solid down day. They bounce, they make it back into the break-even area, and then they go down again for more. Note also, a really good thing to see in this one is that just because they broke that line doesn't mean that they're going to immediately bounce. It just means that in order for them to continue, that more participants are going to have to come into the market to continue moving things down. They've already stopped all of the people that were long already in the market out. So you're going to need higher time frame people to come in and move it down. And when we get trend days, that is what happens, and they will spend the whole day just going down along this line. Now, this last one is really interesting because here you had an example where there was actually quite a bit of absorption in this move, and so it was really slow. So as price moved up, the cost basis also moved up with it. But eventually they got to a point where the buyers had just bought so much to get it up there, they couldn't sustain price. And so what do they have to do? They have to go down and, they go all the way back to the break-even point for those buyers. Okay, so after all of that, we still have to go through the settings. Oh, by the way, like they did make a little move higher, but it's just, today has just been like the perfect example. Anyways, so when we come into the settings here, there are two settings that I want to point out first. There's this reset on session that is checked by default, and that's the way that I use it. And essentially what this means is that at the beginning of a session, the inventories will reset. So this is useful because once the regular session starts, there's so much more volume coming in that the positions from the overnight session don't really matter as much. So I would recommend having a session template with multiple sessions in it for the overnight and the regular session, and then use the reset on session. There's also this cumulative option, which is checked by default. If you turn cumulative off, then essentially what that means is that the inventory will reset on each bar. So I've been doing some back testing lately with that, and in back testing I've had some success with that one, especially when there's a confluence between the cumulative one and the non-cumulative one. The next thing that I want to point out is there are a ton of plots. So NinjaTrader kind of has this limitation where you can't have an indicator that really draws on the price series and also creates its own plots down here. That's why I have added the indicator in here twice. So on the second version of the indicator, then I have some of these lower plots turned on. And what these plots essentially do is they kind of show you the internals about how it's calculating those prices. So how much inventory do they currently have on? How many profits have they built up? And how much risk are they allowed to take on because of the profits and everything else that they've taken on? There's also this spread that kind of tells you what the difference is between the average buyer and the average seller position, right? So these are really useful to just kind of try and determine, well, why is it doing what it's doing? This is also a good time to point out that the way that the indicator is kind of determining where positions are is based on a best case, worst case scenario. And what tends to happen is that one of those two scenarios will just be dead wrong. It doesn't make any sense. And so it will be really obvious. So here with the inventory cost basis, you can see that the amount of inventory that the shorts have on has just kind of flatlined, right? So that means that kind of scenario where the sellers are absorbing contracts and moving price down, it doesn't really make a whole lot of sense right now, does it? And lastly, there is this log timing option. So this indicator is quite computationally expensive. And in addition to that, you have to have tick replay on the chart in order for it to run. So what this will do is it will output to the NinjaScript output window how long it is taking to do these calculations. And you can kind of use that for timing, or maybe you get a new computer, you want to see how much faster it is at doing that stuff. Well, then you can get those timings. All right. Lastly, as I mentioned, there is a private Discord channel for those that are subscribers. So you have to subscribe for the elite membership on YouTube, and then you need to come into the Discord settings, go to connections, and you need to link your YouTube account with your Discord account. And once you do that, you will get these subscriber channels in the Discord, the chat and data channel. So just remember that I'm doing this all is just me. And so you have any questions, you're not sure how things work, or you have problems, or you want some new features, you want us to build some new things into the package, you should just come in and ask me in Discord. It goes to my phone. I'm available all the time. And one of the big things that you're getting with this is increased access to me. So please don't hesitate to take advantage of it. So if you made it this far, congratulations. You've reached the end. I wish you the best of luck. Thank you all very much for your support. I will see you guys when I'm streaming in the morning. In the meantime, stay profitable, friends.